Hello and welcome to Commodity Champions. I'm Anisha Gupta. Well, the commodities are in a bull run with gold at all-time highs. Silver, copper, aluminum, zinc are at a multi-month highs. Even the soft commodities are surging with palm to rubber and cocoa hitting an all-time highs as well. There is support from geopolitical tensions in the Middle East to upcoming elections in many countries, inflation concerns, supply disruptions, improving economic data and Chinese demand. Add to that, the volatile fiat currencies have all led to buying in tangible commodities. With our experts today, we discuss on the part commodities can play in your portfolio. Joining us now is Lakshmi Iyer, CEO of Investment and Strategy at Kotak Alternative Asset Managers, and Vikram Dhawan is Fund Manager, Commodities at Nippon India Mutual Fund. Thank you so much for joining us. Lakshmi, let me start with you. I do understand that when it comes to India, there is a lot more bent towards equities and very less towards other asset classes. But what is it that you've sensed in last few years, especially now when commodities do look like the flavor of the season?
Yeah, hi Manisha. So yes, typically the natural tendency is to allocate to financial asset classes, which is largely equities and fixed income. And within that also, depending on which theme is likely to do well, there is a tendency to allocate to sectors. And within that, obviously, commodities do play an important role. But over the last few years, I think we've seen investor interest gravitate towards not just pure play financial asset classes, but also looking at mediums to participate in the commodities as a sector on a slightly broader basis, beginning with obviously precious metals, but slowly and steadily you see it percolating to other commodities as well. But yes, predominantly gold and silver within the commodities pack seem to be the preferred way for investors to participate.
Lakshmi, you know, when you talk to people and they say, oh, I have a long-term portfolio which I don't touch on these day-to-day or weekly or monthly volatilities, how would you look at the definition of a near-term portfolio and a longer-term portfolio?
So, Manisha, near term can be next 1 hour, 1 week, 1 month. But when you are preparing and planning for your larger goals, your portfolios have to have much longevity. And when I say longevity, it is north of 1,000 days. So anything tops of 3 years, 3 to 5, 7 years. I think that's the kind of minimum long-term investment outlook that one needs to have. And if you are a fill it, shut it, forget it kind of an investor, then you should look at a 10-year plus. So I think the definition of short term and long term obviously will vary from people to people. But I think ballpark, if you look at 1,000 day plus horizon, which is 3 years plus, I think it's a reasonable good horizon for any asset class to actually play or play out in your favor.
Vikram, your initial comments as well when it comes to India portfolio and the way we create it and the space or place or spot that commodities have within that.
Hi, Manisha. Thank you for inviting me on your show. I think I'll add to what Lakshmi said. See, we are a commodity deficit country. I mean, whether it is crude oil, gold, silver, even in the new age metals, the battery metals, etc., we don't have any significant capacities to produce to cater to domestic demand. But the unfortunate irony is that unlike let's say maybe a Japan or let's say most of Europe, where they have given up on their local domestic exchanges and they basically hedge or trade through either New York or London, or you have China, which has got a very strong homegrown commodities market. We are actually in the middle. We are neither there or here. So I think what needs to be done is we need to have a very clear policy. Either we have a big thrust towards developing the Indian markets, which live up to the global standards, and if that is something which is not viable, then I think even the local investors, local funds should be permitted to, permitted access to the overseas commodity markets. So unless we come out of this range, there will not be any significant traction or significant interest, neither from the fund houses, investors, or the participants.
So Vikram, as you said, India is a commodity deficit country, but an increasing population and increasing thrust also when it comes to infrastructure and construction and defense and make in India as per se, where you do need all of these commodities, but there are hardly any hedging mechanisms or investing mechanisms for that matter for a longer term portfolio. How do you see these in present scenario, and what is it that you think should be the changes made so that we have more commodities in portfolio?
Sure. So I think, Manisha, I was fortunate enough to be in Europe when the entire thing took off in commodities. Prior to mid 90s, late 90s, the market was dominated by traders and corporates, and the liquidity used to be what it used to be. But once the banks and the funds came in a big way, the liquidity just skyrocketed, and the participation, the cost of hedging, the cost of holding commodities, even the cost of borrowing and lending in the commodity markets just plummeted. So I think unless there is a big thrust to a push, I would say, to involve funds and banks into the commodities in a big way, I don't see the ground reality changing any significantly.
Oh, well, yes, there's a lot that needs to be done. So, Lakshmi, when we do talk about commodities on whatever limited avenues that we have right now, whether you talk about underlying commodities, so whether it's about futures, it's about ETFs right now and funds as well, what are the various things that an Indian portfolio manager looks at right now? Is it about safety, diversification, returns? What tops the mind?
Well, I would say, Manisha, it is all of these that you just mentioned in varying proportion. Liquidity definitely is of paramount importance because every time an investor comes into a particular fund or a particular category, the first port of call is the typical tendency to compare it with the most liquid category, which is the listed equities. And obviously, then comes obviously what kind of returns potential that the particular category has and how safe is it from an investment standpoint. So I think in varying combinations, when a portfolio manager is constructing his or her portfolio, I think all of these in the right proportion will be definitely an important ingredient. But most important thing also needs to be kept in mind is that when you are investing in a particular category of commodity, for example, you are subject to the concentration risk. So I think overarching, all of these points that you mentioned is to keep in mind that when you are, and which is why most of these categories should be used as complementary factors to your already existing diversified portfolio. Or if you don't have a portfolio yet, and if you are planning to make one, portfolio manager obviously when he or she will invest in that particular commodity, as I said, it's almost 100%. So I think that is one thing which one needs to keep in mind to ensure that there are no mishaps when you are in your investment stage.
Well, that point is well taken. But when you talk about commodities, and Vikram, this one is to you, the conversation that you mostly hear on the road is that commodities are very niche. We do not understand. But so is the case with debt and various other things that people do own in their portfolios. Why is this certain aversion, if I can use that word, when it comes to within commodities?
So, Manisha, that's absolutely right. I mean, unlike debt and equity, commodities don't come with a balance sheet, P&L account, or a rating. So, you need a while of experience and expertise to handle that. Unfortunately, I mean, to extrapolate the example of IPL, I mean, when you started IPL, the bench strength of the Indian cricket team, skyrocketed. So, unless, we have the large institutions which embrace the commodities. I mean, asset allocation is a very important. I completely agree with Lakshmi. Asset allocation is a very important aspect of commodities. But I think we have to go beyond now that we have spent about 2-3 years, and the response has been good. The whole story has been pretty good as far as the multi-asset, funds story is concerned. I think now it's time to go way beyond that and maybe look at standalone commodity funds, which are the need of the hour. I mean, we only talk about crude oil when it is approaching $90 or $100, and we have not even thought about the strategy about battery metals. So if we want to become a green tech superpower or an EV superpower, then where is that sort of hedging mechanism or investing mechanism for the common investors? So I think there's a lot to be done over here.
Oh, I totally agree with that. But with that, we'll have to just slip into a very short break. But don't go anywhere, because when we come back, we'll have this discussion continuing with our guests. We'll tell you, or we'll ask them on what commodities should be in your portfolio, and are commodities a good diversifier? Answers to all of those questions after this break.